Welcome to Where We Meet, a podcast by Society. I'm Jessica Freiberg, and each episode we start with an accounting topic and then see where the conversation takes us. Because in our world, it never stays in one lane.
All right, welcome back to the Where We Meet podcast. I'm the host, Jessica Freiberg. Today I'm joined by
Isabella Pludniak.
Eric Franklin.
Thanks for joining us, Eric. This is Eric's first time on the podcast. He's one of the newest partners at Society, so happy to have him join us today. I know you're heading out on vacation soon, so what do you have planned?
Yeah, so we're doing our vacations a little bit later this year. I feel like I've been getting a lot of grumbling from the kids, but I mean, Jessica, like, you'll appreciate this. So like, we're doing renovation at the house because it's a newer house. So it's like, kids, like, it's still like a win for you. One of you is going to get a bedroom, so just be patient. But so for vacation, we're going to do, somebody told me it was the top of the Mitten in Michigan. So Traverse City. Never been there, heard it's nice. We're going to do Sleeping Bear Dunes. I don't think I guess people get really worn out hiking the dunes, so we're not going to do that. Like, maybe I'll take like a picture of myself going up it and tell people I did it.
That you did the hike?
Yeah, so, but.
Are you staying there or doing camping or doing it like a Airbnb or?
Airbnb.
Yeah.
Yeah, my kids aren't campers.
It's fair. I know you're pretty outdoorsy, so I was just trying to gauge, how outdoorsy this vacation was going to be. But
yeah, I feel like, so, and I just to share more, so I served in the military years ago, so I do feel like because of that, like, people are like, oh, he must be outdoorsy. But ironically, like, I do like doing outdoor stuff, but like, once the day's over, like, I want like a hot shower.
Okay.
Kind of like a nice bed. So I think like glamping would probably be more like my style. So
It's fair. I can appreciate that. Yeah.
Yeah, we went up to Traverse City in the winter, and it was really pretty. It's a very cute downtown area, and we stayed kind of on the outskirts in an Airbnb as well. But our kids loved it, so hopefully you have a good experience.
Thank you. So I saw for the winter stuff when I was looking, there's like skiing. Like, do you guys do skiing or sledding?
We didn't do skiing this past time, but it's on my goal list of things to do with my kids at some point. Yeah, I grew up skiing, so it's something I feel like they should have the experience of doing, but 1 on 4 seems a little intense. I got to find a place that teaches ski lessons.
I don't know. I went up to Alpine at this point 10 years ago. There's a nice bunny hill. Great and
How did it go for you?
Not great. I fell down and couldn't get up. And then it finally clicked for me when I've been on a motorcycle before, like a sports motorcycle. And so there was an instructor there that was like, have you ever been on a motorcycle? And I was like, yeah. He's like, that's kind of how you want to do skiing. Like, you want to lean into the turns. And that, so that was better. But then my cousin took me up on a green run. What is that called?
Yeah,
sure. And that was very scary. So but it was a good experience. I felt like, the instructors were good. There was a lot of little kids being instructed. Yes,
it was you and all the little kids.
It was instructed. In fact, my biggest fear was that I would lose control as I was going down this bunny hill and just like annihilate some of these kids.
It's reasonable.
Yeah, and there's like a river at the end. And so if you really kind of go fast, you end up in the river. So yeah, I avoided that.
A lot of obstacles there for you, but it's definitely something I want to do. Well, recently, Izzy and I were on a call with a potential client, and we were talking a little bit around, just some of the tax planning that they're looking for. And so we thought, since Eric here is a leader in our tax department, that maybe we could run some thoughts by you on some strategies from a tax planning perspective, and, really maybe just think about things that small businesses, startups, other companies, maybe some advantages that they could take on a tax perspective, or things they're just not aware of that might be beneficial to them.
Yeah, no, that's true. That's a good question. I feel like probably am more not in our line of field. People always think of, like when they first come to me, they're like, hey, like, what's the big thing that we can do? Like, what's this like grand slam that's going to like save us a bunch of tax? But realistically, I'm not a big baseball person, but I feel like the baseball analogy is good. Like, tax really isn't about hitting home runs. It's really about like short ball. It's RBIs, it's sacrifice bunts, like it's all little things that add up. So I feel like when we're doing a lot of planning, I like to focus initially on some of the simpler stuff that's just like, it's like, how do I put it? It's almost like agnostic across all industries, like it can help everybody. So one of the ones I'd like to focus on first, it's a simpler topic, is I'd like to talk about what's called an accountable plan. And anybody like with a tax background's like, oh yeah, I know what that is. But I feel like most people outside of tax are like, what is that? And I guess the best way that I can talk about that high level is, and maybe I guess let's take a step back, dealing with like a newer business, like business owners come in, like, what can I deduct? And there's the obvious things, like all the expenses directly related to the business, you know, like if you have a building and you're paying rent, like that's a deduction. If you're paying for office supplies, that's a deduction. Like if you've got W-2 employees, that's an office expense. But some of the other gray deductions, I feel like would fall underneath an accountable plan. So I'll throw out some things, and if you see any nuggets, feel free to grab them. But so like an accountable plan would cover like reimbursement for business travel expenses, travel and meals would fall underneath this, business use of like your home, maybe like business use of your cell phone. So a lot of this stuff is deductible for the business. However, the appropriate thing is have an accountable plan in place. You know, heaven forbid, like the IRS were to ever like come in and challenge it. So
is that important, I guess, for both the owner's expenses and the employees? Or is it, is it a focus from both perspectives or just for an owner?
Yeah, so that's a great answer. So an accountable plan, it applies for owners and employees, right? And I would say especially in the earlier stages of a business, like it's really a lot more the owners doing it, getting it bootstrapped. The importance of an account plan, which I like how you brought up the two things with the owners and the employees, is it has to be non-discriminatory in nature. Like what's deductible, what the owners are going to take as a deduction underneath the accountable plan has to be eligible for employees as well.
Okay. So both sides benefit, really.
Mm-hmm.
And so I guess taking from what you just said, I'm assuming it has to be written somewhere?
Mm-hmm.
Okay.
Yeah, I'll be honest. So like this is where we always talk about our world, like, because like the legal profession and the accounting profession, like we walk really close together, but like it's important like to know that like we're not in the business of practicing the law. So like accountants aren't out drafting accountable plans. Like if the business owner themselves, like they want to take the time to draft out, or maybe, because sometimes, I mean, you can probably see this falls underneath like a function of human resources, maybe human resource person. But like if you're a new one starting up and you're not comfortable, like the best advice I would say is like meet with a good attorney. Like they're going to give you like all the ticks and ties for the plan. There's really big three like overarching. You know what? I do want to take a step back, and feel free to chime in. I do feel like some of the expenses I've talked about with an accountable plan mirror closely to another section, which would be considered like fringe benefits. And I guess going back to your question on the plan, Izzy, like that accountable plan helps ensure those benefits aren't captured and picked up as fringe benefits.
So they're not taxes paid by the employees then on those benefits or by the owner, right, is what you're clarifying there with that statement.
Yeah, exactly. So technically, like access to the plan, like let's say like a company is having their employees for business purposes, like use their cell phones for a portion of it. Like, hey, you know, use your personal cell phones. It's for business, so we're going to reimburse you for it. With the accountable plan in place, the employer can reimburse them, and ultimately the employer receives the funds. It's not part of taxable income, so they're not paying federal or state withholding. they're also not paying the FICA taxes, Social Security, Medicare. So they're not paying it. But the win part for the business is they still get the deduction, right? So like for our business, for Society, for our accountable plan, like we're reimbursing employees for personal use of their stuff, but Society's still getting that deduction because it's a legitimate business expense. So
yeah, that makes a lot of sense. I mean, I'm sure, as you mentioned, when businesses are starting up and there's like owners out there that are doing a lot of the work and maybe they're not paying themselves a paycheck, this does seem like a good solution to like at least getting some money back in their pocket that they're able to reimburse themselves for some of the expenses they're incurring. Are there limitations on what types of expenses can be reimbursed as part of the plan?
yeah, I feel like, ultimately there's like three main criteria. So I think like the first driving thing, and this is again where it's kind of like making sure that like we're staying in the lane of accountants, but like ultimately like the expense has to have like a business connection to it. It can't just be like, oh, you know what, we gave you a company phone, you can use it for whatever. Like really it's just that business use that should be getting deducted. The other big thing though, I think that's important is like in order to take that deduction, like you want to make sure there's like adequate documentation. Like again, like worst case, like the IRS or some state body comes in as questioning it. Like you need to be able to substantiate and be like, yes, like we paid them X amount of dollars for this portion of their cell phone, but like it was used for business. So,
So what would, I guess, qualify as adequate documentation? Would it just say, employees are required to add their like app on their phone to take business calls, right? Like, is that kind of what we're getting at? Is like some sort of written narrative about like why we think that there's business use of their cell phone?
Yeah, I would think so.
I mean, I know that's law, right? So like we want to tread carefully there, right?
But talk with your attorney first.
Yes, so this is not legal advice.
Yeah.
I know what sometimes I have clients that, are like, oh, well, I took a family trip to Rome, but while I was there, I did a little bit of business.
I answered a phone call, so
can I deduct this expense? And usually, I think usually the answer is no, but in certain cases where there could be a business case to part of the travel, right, then there's usually some sort of allocation maybe that's recommended between, what is business versus personal.
Yeah. And I won't dive into the nuances, but I feel like you kind of like hit it on the head. Like there's, I feel like a good word to use is there's got to be like a reasonableness aspect to it. Again, like we don't want to go too into the weeds on this. It's, a lot just to make sure like people know that it's there. Because I do feel like, especially, working with those new business owners, I'm talking with them. I'm like, well, hey, like, before you had all these employees, like you were driving to the department store and you were picking up office supplies, or like you were going to the bank, or like you were going on your dollar to meet at like networking events. I'm like, that mileage, those travel expenses, like those are deductible. And they're like, really? I can deduct? I'm like, yes. And that's where like the plan comes in. Because like it's expenses that, especially like if you look in the world of financial statements, it's very easy for us to capture everything that's like going through like the balance sheet, like it's going through cash, it's going through credit cards. This is stuff that it's there, it's still being incurred. And like let's pick it up, like let's get a deduction. Like on the tax side of like let's pay like a little less tax. So
what about like their time? Is there a way to deduct their time?
That is probably ironically like one of the biggest questions that I have, which I think it's fair, like because people are putting a lot of sweat equity in. And I can't remember the exact saying, so I'm gonna like paraphrase, but like when you're looking at the Internal Revenue Code, everything has to be like everything is monetary based.
Yeah.
Right. So again, like, and I'm not going to take anything away from like, those business owners who are working hard. But in order to get a deduction for that time, like cash has to like actually exchange hands. And so like, depending on the business, so like, like a partnership or sole proprietorship are a little bit different, but like a C Corp or an S Corp, like if an owner wants to get paid for their time, they need to like be doing payroll for themselves. So like they get the deduction, obviously personally, like they're still paying it. But yeah, like unfortunately there's no
Hard,
just kind
yeah.
of like, well, I worked 20 hours, so based on this format, I got this deduction. So
Yeah, I get the question around sweat equity a lot, like, but I'm putting this effort in, like, and even with ownership and other things, like, I usually am like, well, sweat equity is a term people use, but from the tax perspective, it's not actually like earning you ownership in the business without some sort of monetary transaction.
mm-hmm.
Kind of unfortunate, right? Because I feel like some of these startups then go on to sell, right? And they might have put in hours and hours of sweat equity up front, right? But then depending on kind of the structure of the transaction, they end up paying tax on the gain of the book value of the organization, right? Or the tax base of the organization. And it's like that sweat equity just never gets deducted. So kind of an unfortunate aspect of it all. But I mean, on the positive side, they get a lot of money.
There's a win.
There is a win. Yeah.
I always feel like people do that. Me, especially like in M&A, they're like, oh, I'm paying so much tax. They're like, but don't get me wrong. I'm like, I'm kind of
$30 million.
kind of happy to be doing it, but I still don't want to. So
Yeah. I mean, I think at any point in the life cycle, though, whether you're a startup or, in the middle of your life cycle or towards the end, thinking about these little things still chips away at that tax bill.
Mm-hmm.
Yeah.
For sure. And like even like in the grand scheme, like when they're, and I don't want to like go too down a rabbit hole, but like in the grand scheme, like, there's like a lot of times there's like a goodwill component to that. So at least like that part of the transaction is like at capital gains rates versus warranty rates. So there like is a natural savings there. So
So what would you say would be like the top 3 plans or more, I guess, that you would encourage all businesses to at least think about when we're talking about accountable plans?
Yeah, I do feel like, so the ones that I've seen are like very simple and just throw like a really wide net, right?
Mm-hmm.
But like, so like, I think maybe it's like, let's talk about like, if you look at the business, you can like look at the inherent expenses of a business. So like, any type of business where there's like a lot of like outside sales, like things like, going back to what I mentioned earlier, like travel, lodging, meals are going to be very big components of it. It's going to be very heavily involved versus like maybe if you're looking at like an established business where it's like it's like a mid-sized manufacturer. They don't, they're established. They don't do a lot of outside sales. Like the employees just drive there. They like work there. There's really not that need for those extra things. Also looking at like our industry, like professional services, right? So like contrasting us versus like a manufacturer. Like a manufacturer, like everybody's there, like you have to be on site versus like with us, like we're traveling to clients. And we're using a lot of like this stuff, right? In our jobs. Like we're bringing an IT with it, we're using it remotely and we're bringing it to clients. So we need to like account for that. So yeah.
Well, I was going to say, I think when, nowadays where there's a lot of people working remotely, right, or having some sort of hybrid work environment, that probably also has an impact to your point, because like there's technology that people are using a lot more now at home that they maybe weren't using in the past. And so I assume that would also maybe have an impact on these accountable plans and what people are able to deduct from a business perspective.
Yeah, for sure. For sure. I know that, and I feel like that's the other thing that I would throw out there, again, like accountant, not attorney. But it doesn't hurt to like do a freshen up, especially like if you've had a plan for the last decade. Like even if you look at us now, 2026 versus 2016, like it's a very different world. Like it's crazy how differently, even within the past couple of years, like how differently like we do our own work, whether it's like software processes. So like I do think it's healthy to like look at it, if not annually, at least like biannually, and just be like, okay, like, does this make sense? Like the stipends or reimbursements we're doing, are they like still applicable today? Like they were like 5 years ago, even like, and I feel like a perfect example is like COVID. Like COVID probably brought on like a huge need for plans like these, but like the world's shifting away from the COVID world. Like it's different now. So maybe it's time to like go and revisit that. So
Yeah. I I think one of the things in this environment, and it is a changing environment, I do feel like it's still for some industries difficult to find people, right? And so I think a lot of companies and organizations are looking to their benefits to maybe be a draw or re-looking at some of those plans. And I know sometimes I get emails from clients that are asking, well, I'd like to reimburse tuition, right, to my employees, or I want to refund portions of deductibles to my employees, right? And so I think in all those instances, to your point, it's important to take a step back and see if you have a plan in place, because there could be, ways to make those types of benefits not taxable to the employee, right? And so, but what I think a lot of people are like, well, I just want to be able to attract my employees, right? Or new employees, or keep my employees. It's a retention strategy, and not always thinking about, okay, what is the tax consequence for the organization or for the employee? And so stopping to maybe have an HR professional look at it or an attorney look at it, I think is for sure important. Yeah. A fresh look never hurts. Yeah. Or at least an upfront look before you make that decision. Yeah.
I'm sure that you wish that you could get a tax deduction for the renovation on your personal home.
I'll find a way. Strike that. Energy efficient, maybe?
Maybe, yeah.
Are you working on this family vacation? Maybe you could write that off.
Oh, yeah. Yeah.
Kidding. That was a joke, too.
I definitely, I feel like you kind of, and we joke about it, but there's definitely a dark side to this. And I feel like even when we as a firm are kind of vetting and talking to other clients, that's something we've taken a consideration. You can take a look at a high level and be like, yeah, this is really aggressive. So,
yeah.
Be like, maybe this isn't the best bet. So,
yeah.
Yeah. There's definitely clients that I've worked with in the past that, would like things to be more aggressive from a tax perspective, and it's not a good fit. And I think there's others that maybe live a little more dangerously in some aspects, but want to make sure it's very buttoned up when it comes to a tax perspective. So they appreciate having us in their corner to make sure they're doing everything appropriately and not taking too much risk when it comes to that side.
Yeah, for sure.
Well, thanks, Eric. We appreciate you joining us today. If you found today's topic interesting or have more questions about accountable plans, obviously feel free to reach out. And stay tuned for future episodes where we'll be talking about fringe benefits and how that plays an impact on businesses.